Hi, everybody, and welcome to the Business Success Network podcast. I am joined today by the wonderful Carl Ford, who it's not his first time on the podcast. He's got a big smile on his face if you're watching this on YouTube. If you're listening in, then please do drop your comments and stuff because we've got some questions for Carl today. Welcome, Carl.
Hi, Stacey. Yeah, I'm looking forward to being here today.
Good, and I'm really pleased to have you back. I think you're probably the first, if not the first, definitely one of the first people to actually come back onto the podcast. So obviously we didn't get enough of you first time round and we're having you back for a second time. So do you just want to share with everybody who you are, what you do? I sound like Cilla Black, don't I? Who you are, where you come from?
Yeah.
I'm showing my age now. Go on.
Do you know what? I think, there might be some revealing of ages later on in this anyway. So my name's Carl Ford. I'm from Carl Ford and Associates, which surprisingly is the business that I founded. It's been going for 10 years. 10 years, the anniversary was at the beginning of June. So only just gone past that milestone, which I'm really pleased with. We're accountants, and as part of that, we don't just do accounts like some providers. We do bookkeeping, we do payroll, then we'll do management accounts, which is what you do in year. We'll do the financial accounts end of year. We'll do tax reviews. We'll do some tax work. So we've got, basically, it's a one-stop shop for your sort of finance needs. And if it's not something that we do ourselves, from years of building a network, I know someone that can assist.
And we were kind of talking about that before we started recording. We were talking about network and we were just chuckling away because the questions that are coming from today's episode, we posted this morning. I put a lovely photo of Carl up in the Business Success Network UK community. Shameless plug, if you're not in it, head over to Facebook and search Business Success Network UK and you will find it, and you'll see Carl's face in there. So I put a lovely post in saying I was recording a podcast with him. What questions would you like to know? And this is where growing your network and growing your visibility come into play, because we've had some really great questions come through. We've had a bit of fun this morning with an accountant. I think we think he's an accountant who'd commented on there saying, this is a bespoke question, please get in touch. And it was kind of one of those drop links, run away, never to be heard of again, didn't know who they were. Mm-hmm. And so actually what happened was quite a few people within that network said, Carl's an expert accountant, we're asking him. And it was lovely to see because you didn't actually have to respond.
No, it's really nice when that happens.
It's, you are our expert when it comes to accounting and all things accounting. So it was really lovely. But that comes from you building up a network over the years, not just our network, but you're quite a strong networker, I would say.
Yeah, I've been networking for 11 years. So I was networking for best part of I think probably about 14 months before I started the business properly, just to build up and hit the ground running.
And that's amazing because a lot of people think, right, set up a business, do this. What have I got to do? Get this sorted. Oh, right. Now I need clients. Now I need to go and find them. What do? I go networking. So you'd already got that in.
Yeah. And I'll be honest, that wasn't my intention, my strategy. It was just a happy coincidence that happened to be a good strategy. That's something that I'd recommend to people moving forward. But I just looked into it. There was no skill involved in that decision.
You're just a social butterfly then and wanted to go and meet people. Yeah, we know the score really. Right, so let's have a start with some of these questions then. And we have had some really great questions from a number of different people, and I really like them. And that's the good thing about opening it out to the network, I think, is that I could have come up with questions. Some of these I possibly would have come up with, but others I wouldn't have. So let's start with one from Rachel Hutt. Rachel Hutt is a franchisor of a messy play company. And she wants to know, or the question that she asked was, when should she become a limited company as opposed to a sole trader? Now, I know Rachel's got a couple of businesses, so she might be asking this for her network. She might be asking it for a franchisee, or she might be asking it for herself. So on the whole, when should you go from being a sole trader to a limited company? What are the benefits and stuff?
I like how we've started with a really easy question.
Just
So, yeah, I can't give a definitive answer on that. And that's something that I think people should really take note of, that it's probably one of the top 5, probably even top 3 questions that's posed to accountants when to move from sole trader to limited company. And I'll see that in lots of Facebook groups, lots of LinkedIn groups. And you see people responding with, when your income hits this amount, when your turnover hits a certain threshold, when something else happens, when something else happens. And all of that, yeah, could be valid, but it's so individual to your circumstances that there isn't a default answer to give. The obvious one is if you feel that you're paying too much tax, because as a sole trader, the basic rate of tax, it's 20%, then it jumps up to 40%. So then you compare that to limited companies, which is a little bit complicated. It used to be a flat rate of 19%. So that decision was very straightforward, that if you get triggered into the upper band, so you start to go into the 40% one, that's something to then trigger it. Yes, we need to look at it. But there's other things as well. If you're in a, let's say you're in a high risk industry. So with this, I'm thinking childcare. So if you are involved in providing a childcare, or in fact anything to the public where you're interacting and you've got some kind of duty of care, I would think maybe you need to become a limited company. And that's because a limited company, it's an entity in its own right. As a sole trader, it's you. So if something in the unlikely event goes wrong, you as an individual could be sued if you're a sole trader. And that means that anything you own is at risk. Your house, your car, all of your possessions could be taken away from you in some way. If you're a limited company, your liability is limited. Unless you've shown some illegal activity or you've been grossly negligent, it's the limited company that is the one that gets sued. So it's only the assets that are in that pool. So it's protecting you personally. So that's one thing, what industry you're in. Yes, there is the tax.
That's a really good point, Carl, actually, because I'd never thought of that. And, you know, we all have our insurances and things like that that cover us, or, you know, that hope cover us. But actually, I'd never, in terms of when to go limited, that is something that I certainly hadn't thought about, is what industry are people in. Really great point there.
Yeah, and it's more applicable to some industries than others.
Who knew we were going to talk about doom and gloom and death and accidents within the first 10 minutes of our podcast?
Because you're talking to an accountant and there's 2 certainties in the world, death and taxes.
You had to get that one.
Now I've got them both in.
Yeah, I love it. So industry then might be income related.
Yeah, also the way that you portray your image is an important one. It's wrong, but if you look at someone that's registered as a sole trader, it could put people off. Whereas if you see someone that's limited company, it just gives a different level of prestige to who you are, a different level of credibility, because you've got an extra level of scrutiny that goes onto your finances, that what happens with them. So yeah, think about how the image of your business is portrayed for whether you do it. I guess those are the 3 key considerations, but there's so much more, like multiple income streams. That so many of us these days do have multiple income streams. And are we allowed to say the C word on YouTube these days or not?
What's the C word?
The thing that happened in 2020.
Oh, I don't know.
Yeah, I don't know if it's still the blacklisted word that gets your podcast flagged or not. So the thing that happened in
2020 that caused a global
issue
shutdown,
that identified people how fragile income streams can be. That if your sector gets shut down for whatever reason, let's be honest, most of us didn't have that thing in our business plan when we were exiting 2019. Yeah. So it shows that the unexpected can happen. So most of us, after that point, looked at our income streams and diversified it. So if you've got a diverse income stream, that's another complication to add into it because that affects your taxation. So this is why, honestly, I can't stress this enough. Be careful about accepting advice from, I'm going to say Facebook groups, because that's where a lot of people go, but having blanket advice from people.
Dave down the pub.
Yeah, Dave down the pub. Other names are available, but typically it is Dave down the pub. I shouldn't say it because Dave is the landlord of my local pub. Be careful to accept that sort of advice because some of it could be grounded in experience, which is fine. But a lot of it, it's hearsay and it's, I think this or I think that. Talk to someone that actually knows, and then they can look at all areas of your business and, to a point, your personal life as well, to make sure the decision is the correct one for you. There is no default answer for it.
No, and that's great. And that's what I love about you, Carl, is that you won't just, I've seen you within Facebook communities and people that are after advice. You always say, oh, I've got a blog on this. However, let's have a chat, or, here's some information. Yeah. But realistically, you want them on the phone because you need to know what their personal information is and that kind of thing, and their circumstances. So I really like that. It's not a one size fits all. And actually, I remember with my previous company, we were a limited company. And I remember people saying quite the opposite. Why are you a limited company if you're not earning this bracket or that bracket? And actually, it's exactly what you've just said there. As we took to franchise that out, we wanted to make sure we had that A level of protection, but also it did look better for us being a limited company rather than it was a partnership at the time.
It could also be a mandatory requirement if you're engaged in a tendering process looking for work. Certain organizations, maybe local authorities, won't engage with you. If you want to subcontract towards someone, it could be mandatory. You need to be a limited company. So there's lots of considerations at play.
Yeah, no, brilliant. I love that. So I hope that's answered your question, Rachel. One of the things that she did point out on there was she was talking about corporation tax and she was worried. Mm-hmm. She said, there's lots of hearsay at the moment with the new government that corporation tax is going to rise. Tell us about that, Carl. Corporation tax. Everyone is surprised, don't they?
Not in this case, no.
Obviously,
for pay rise. Yeah.
Those of you that are watching on YouTube saw my sarcasm in my face there and my gritted teeth. If you're listening to this, you won't have. So I was saying that with a hint of sarcasm.
Yeah. So corporation tax over the last, let's say, decade as a ballpark, a year bracket, it's been coming down. And there was a trajectory to bring it down further. It sat at 19% and it was looking like it was going to come down to 17, possibly even 15%. The issues of 2020 put a stop to that because there was a lot of financial support issued by the government and that needed to be repaid. And it was decided by the Treasury and the Chancellor that one of the ways to repay that money that had gone out would be by increasing corporation tax. So the corporation tax rate went up from 19% to 25%, which is quite a significant jump. And it was done in a relatively short space of time. So after some sort of negotiation, it was decided that you'd have a 19% rate for small profits, and then you'd have a tapered rate for in between, and then the headline rate would be 25%. So sort of easing businesses into the main rate being 25%. So yeah, it's a big jump. It's a hefty chunk of profits. If I went with my personal view, I think it's too high at 25% because it will deter some businesses coming in. The UK needs to be seen as a desirable place to base your business. That many years ago, it was so that if we lower our corporate tax, we become more competitive and we'll have organizations relocating from Europe into the UK. That worked. It was a good strategy. Obviously, government funds aren't a black hole that's limitless in giving away money. So yeah, we need to balance the books. But the 25% rate, I do feel it's too high. And I think if we reduced it, it would it sounds wrong, but reducing the tax rate would probably increase tax revenues because you'd attract more businesses. I think it may have been 2 weeks ago, Dyson announced that they would be leaving the UK, and it was specifically, one of the things specifically cited was the uncompetitive corporation tax rate. And let's be honest, companies want to pay as little tax as possible. Who doesn't want to pay as little tax as possible? But they're not saying they don't want to pay tax. It's just they want it in a competitive way, because they have, yes, people need to pay tax to keep the streetlights on, to get hospitals running, but equally they have a responsibility to their shareholders. So they need to balance those two. So I think we need a more competitive rate. That one thing that you said is that there's some concern that taxes will go up.
Yeah.
I'm not going to get political on this, but
really?
I'm gonna skate the line to not be political, because we all know that parties make promises to get elected, and then once they're elected, they don't necessarily fulfill those promises. So all I can do is go on the word so far, and that is that in the build up to the general election, Labour did state they would not increase corporation tax. So it does look like it will be capped at 25%. There's no hint that they will reduce it. But Keir Starmer repeatedly did say he wants to get the economy moving again. So how is he going to do that? One tool that he would have potentially is to reduce corporation tax. And I know that there's some people groaning out there now, but companies dodging tax, they're not dodging it. If companies pay less tax, let's say that rate, 25%, was reduced to 20, and there's no tapering. So some companies pay more because they're not the 19% anymore, but other companies are paying less. That means that they have more surplus profit to reinvest. When they reinvest, they grow. When they grow, they employ more people. When they employ more people, that reduces government spending because they're not paying as much out on benefits. So it's a better win if you look at like the bigger picture. But we don't know any of this at the minute. We've got a new chancellor, which is Rachel Reeves, and I would say a big kudos to her, because I was shocked when this was stated, but she's the first female chancellor that we've ever had in this country. Ooh. Which, I was surprised at, because I know that males take the more prominent roles in politics, but on the basis that, if memory serves me correct, we've had in modern history, we've had 3 female prime ministers. I'm surprised that this is the first female chancellor. So big kudos to Rachel Reeves. Well done on that. She has stated that she will announce the date of the next budget by the end of July. So we're recording this on the 24th of July. By the time you listen to it, it may have been announced already. It takes a minimum then of 10 weeks from a date being announced to when it could theoretically be set. And that's because the Office of Budget Responsibility takes 10 weeks to prepare the correct reports, that judgments can be made on it. Because obviously, as we saw from a year or two ago, we don't want knee-jerk tax announcements, regardless of how they're thought out, without the correct research and reports done first. So it looks like they'll be doing it in the correct way. So let's ballpark, we're looking at 3 months. So end of October, early November, I'd say we're looking at it. And that's good timing, because then it gives us like 4 to 5 months before the next tax year kicks in. Because I do expect that they would announce something this year to kick in from April next year. We've got nothing to go on because we've had 14 years of either Conservative or Conservative Lib Dem government. This is the first Labour government for a long time. And this is the bit about showing age a little bit. I do remember 1997 when Labour last came into power.
And I remember it. Do you want me to I won't tell you how old I was?
Well, okay, I was just out of the voting age. I was in sixth form studying A-levels, and we did mock elections. So I stood as a Labour candidate.
Did you?
Yeah, I did. And I was then 18 in the October, so I just missed out on voting. But I had a job, only part-time at that point. But then later on, when I had a full-time job, I could see benefits in my pay in terms of progressively income tax was being reduced. So that's good, because there's a fear that the Conservatives are the party to bring tax down and reduce public spending. Labour are the party to push up public spending and push up taxes. Not necessarily the case, because I lived through 97 to 2010 when income tax came down. So I've seen that side, and they were pushing the tax-free thresholds up.
I was still at school. I was 15 in 1997. Just thought I'd get that in there.
Thanks for that.
It's all right.
So we don't know, because it's been so long since we've had a Labour government, what will happen. They need to balance the act of bringing in money to spend and fulfill their election pledges, combined with not hiking taxes, because that will absolutely stifle growth. So we need to wait and see. Yeah, watch this space for about 3 months' time.
There we go. So you've kind of got we've talked about this before. We were networking on Friday, and you mentioned kind of October, November, and that's where we are going to come back, and we're going to do a after budget podcast with you, so that we'll have more questions. We'll know kind of what their plan is, that kind of thing. We'll have a few months of this new government, so we'll be able to see what's going on, and we're going to come back and ask you loads more questions and see if some of your predictions are right. Next question then. We're going to fire through some of these now. Emily Hewitt is a member of the BSN group, and she wanted to know your top tip or tips for people that are starting from scratch. And she describes her current position as she's setting up bank accounts, she's setting up all the, literally the right start of that business. So what would you recommend? What's your top tip?
Yeah, so it's going to sound like I'm biased with this because of the accountancy background and the accountancy business that I'm running, but it is to seek advice. I'm not necessarily saying hire an accountant straight away, because to get good advice, it's not cheap. So you've probably got better things to spend your money on, especially in the early days. But get expert advice, even if that's doing things like buy an hour Q&A session with an accountant. So actually ask the question. Earlier we talked about asking questions in Facebook groups and the dangers of that, because you get Dave down the pub giving his 2 pennies worth of advice. And yeah, there could be some validity in that, but most of the time it's not. It's unqualified opinions. Do you want to start your business life based on an unqualified opinion?
Hit the nail on the head there, Carl. There's advice versus opinions.
Yeah. And that's what a lot of it is. It's the opinion of someone. It's, you don't want to go a limited company because it's too much paperwork. Well, based on what? Is it? Oh, no, don't do that. Don't sell more, because then you'll have to go VAT registered. Again, is that good advice? Not really. So my advice is speak to an accountant. I know that I offer power hours where you can literally just buy this block of time and you can ask me questions. You can even send an email up front to say, this is the areas that I'm looking at. So some research can be done up front before, so you get the most out of your time. So get some proper accountancy, finance advice as soon as you can. Don't necessarily need to hire an accountant, but get that advice from one. I would also say set up a system to track your income and expenditure. I'm a big fan of Xero. As a business, we've been with them now for, the whole duration. Like day one, we went with Xero. And it's great that their slogan is beautiful software, beautiful accounting software. And it's that for a reason. It looks good, which means it's easy to navigate. Use something like HubDoc as well. That's a great way of capturing receipts. How many times have you been for a business meeting? You've gone into Costa Coffee, other coffee shops do exist. You've got your receipt, and then at the end of the meeting, there's some coffee being spilled on it. You can't necessarily read all the figures. Or you've taken it in your pocket and then you've washed it, pretty much destroyed the receipt. Maybe you've left it on your dashboard and the sun's faded
I was going to say, nowadays, with the way the receipts are, you've only got to leave it a couple of months and it's all faded anyway.
Yeah, maybe you had a packet of crisps for your lunch and then you put your fingers onto the receipt. The grease destroyed the receipt.
What crisps are you having for your lunch?
Smoky bacon, to be fair. They are the king.
So it's not Wotsits where you're going to get the orange muck.
No, but that's even worse. So get something like HubDoc to get the you can take a receipt straight away at the time of purchase, and then you've captured it forever.
You've got things like Dext as well, haven't you? I don't know if that's Carl's frowning at me.
Dex is a great system.
Clients to use Dex, that's why I mentioned it. I'm not going to pretend I'm an accountant and know what's.
We used Dex for many years. Now we exclusively use HubDoc within our practice. It links. It's owned by Xero, so the fact that we put most of our business through Xero makes sense, and you get HubDoc for free as part of your Xero. Yeah. So use.
So the reason I said Dex then was just purely to push you to tell people that if they signed up to Xero, they'd get that free.
Use Xero because then you get the graphical representation of how your business is doing. It links into your bank, so you've got real-time information for what's happening. You can see where your invoices are, how many invoices are outstanding. You can automate reminders as well. So if a client doesn't pay you if your payment terms are 14 days, if you haven't received payment after 14 days, a reminder sent. And then you can set up to, I think it's 3, maybe 4 reminders to get that money coming in. So there's so much you can do in there that will help your business. It also looks more professional when you're sending an invoice out rather than something that's maybe you've crafted it on Word and then as you've copied, pasted from the previous one, you've missed something. You eliminate those errors. So speak to an expert as in accountancy wise, but more than that, anything where you need advice, speak to an expert because most people will happily give you an hour of their time. Don't necessarily need to buy the service from them, but just buy an hour of their time just to get you on the right track. Then get a system in place like Xero, twin it up with HubDoc to capture it. So all your data then is you're on the right foundation.
And that links beautifully to what we were saying this morning about you being a great networker and, doing it right from the very start of your business. Because actually, if you go networking, like I mentioned earlier, me and you were out networking. We were sharing, we weren't sharing a cup of coffee. We were networking over a cup of coffee and some delicious pancakes and stuff, I have to say. But it is that who's in the room? Who am I building relationships with? Oh, you're an accountant. I'm just starting out in business. The conversation is quite natural. Have you thought about this and this? No. Right. Well, I'm not ready for this yet. And then you're in their mind when they are ready for that accountant. So, networking is a great way of having those conversations. You've done things like you've done guest speaking within networking groups. We've done masterclasses, things like that, where people can really come and if they're not ready to buy the services of an accountant yet, actually, it's that starter thing, isn't it? Or like you said, go and buy a power hour. That might be the next step. Love that then, starting from scratch. I remember those days. And then Fina is another accountant, and I love the fact that she's joined in on
I better brace myself for this question.
You better brace yourself. There was actually, I think she posted 3, so let's go with 1, which is your thoughts on making tax digital. And I'll link in her second question, which was key dates and deadlines for sole traders.
Okay, I'll take the key dates first. So the biggest key date as a sole trader you need to have in your mind is the 31st of January, because that's the deadline for paying and submitting your self-assessment tax return. And the key point there is it's the deadline, it's not a target. The earlier you
were looking at me when you said that. I could tell your face. You were like, Stacey Calder,
No, I was just looking into the webcam.
Is that right? You were about to call me a deadline dancer. No, I'm not that bad.
I would not dare to do that. But yeah, a lot of people do. They see it as a target. That's when you need to get it in by. No, you can submit your tax return at any point once the tax year ends. And just because you've submitted the tax return doesn't mean you need to pay the tax then. So by all means, do something with that money. Use it as working capital to grow your business. Stick it in a savings account, because now in the good days when you actually get paid some decent interest, do something so your money's working for you and then pay it. You don't have to pay it at the time. So key date number 1 would be the 6th of April. That's when the tax year begins. Then another date is the 5th of April. That's when the tax year ends. You could, if you want, do a 1st of January to 31st, because let's be honest, that's a lot easier. 31st of January is the deadline. And in case anyone wants a fun fact about tax, the reason
There's
that
a
it's
fun fact.
Yes, there is. And this goes back to 15 or 1600s. That's why we have the 6th of April to the 5th as a date for it. It's because we used to have the Julian calendar and we moved to the Gregorian. I think I've said both of those in the right way. Gregorian calendar. And we went from I think it was it was either 11 or 13. I don't remember. I think it was an 11-month calendar to a 12. And it was so that companies didn't miss out on some days of revenue. It was extended to the 6th. That's why we have the silly ones. Other like Germany, their tax year is 1st of Jan to 31st of December. Dead easy. So yeah, those are the 3 dates and a little fun fact about tax.
There we go. Fun fact. I actually thought
thoughts on MTD as well.
Yes, making tax digital. And this is something I said to you.
I sighed when you said that.
You did sigh. But we were talking before we went on air about this, and I said, it seems to someone that's not an accountant that these deadlines keep getting pushed back and things keep changing, and nobody really knows what's going on anymore in terms of those outside of the know. So making tax digital then, are they just going to keep pushing it back? Have they pushed it back? What are the dates people need to know? What's the key things here? And also for those people that aren't yet digital, I'm throwing loads of questions at you here now. You can just waffle. For those of them that aren't digital, maybe they've got their spreadsheet. I was chatting to a charity earlier actually about this. They've got their ins and outs on a spreadsheet. What's that first step? When's the best time? Because it's all right, someone saying do it now, but what's the process? How do they go from, but everything's on a spreadsheet, to, oh, look, I'm booked up to 0 and my accountant loves me and all that jazz?
The first step is I would speak to an accountant, and they either could convert the data from the spreadsheet into 0, or they will tell you the process for you to go and do that. So if you want to move to more digitized records, and let's be clear to distinguish that a spreadsheet is digital because it's on a computer. We're talking more about online cloud-based systems and removing the human interaction with it. Because spreadsheets, yes, they're digital, and the spreadsheets are great. They're a brilliant finance tool, they're a brilliant business tool, but they are prone to human error, because I've done it myself. I've deleted a cell by accident. I've typed over something. I've accidentally hit Control D, so I've dropped the cell information from the one above rather than Control S to save it. There's so many human errors you can make. Moving to cloud-based software, which is what MTD is trying to push you towards, will help you run your business better. It will eliminate so many errors, or at least the potential for errors. You could say, but I've been in business for 20 years using a spreadsheet and I've never made a mistake. That's fine. I've been crossing the road for 45 years and I've never been run over yet.
That Carl, don't say that.
Oh, yeah, maybe I should have given it. But that could change.
Just no, because if
it's fine. That could change. So just because something's always been one way in the past doesn't mean that's how it will be in the future. There's always this. As part of the finance training that I do with people, a huge part of the training that I do, it's risk management and having a risk strategy in place.
And I now have my head in my hands going,
It's
I can't
fine.
believe you've just said that.
It's better I give an example about myself than someone
I
else.
live on a main road. If I ring you from the hospital later, I'm blaming you.
Right, moving on then. But
Swiftly on.
it eliminates the errors of something. Just like I said, just because you haven't made an error in the past doesn't mean you won't make one in the future. And that next error, it could be minor, but it could be quite major, especially with the changes to tax. You don't want to risk that because HMRC have a sliding scale of if you do something wrong, you've got things that are accidental and then you have things that are intentional, that are malicious. And HMRC treat things very differently. But equally, you don't want to get on the wrong side of them with an accidental error. You want to minimize those opportunities. So I'd encourage you to
minimize having to ring them, I'm guessing, because that is like, it is a complete.
Oh, well, yeah. I mean, I think maybe 6 weeks ago, 8 weeks ago, they announced that they were going to close the self-assessment phone lines. They rapidly backtracked on that. I think it was 24 hours later that they backtracked on it because there was just absolute uproar. Because we said, oh, well, you can go online and submit things to us. Yeah. You can do all these other things. No, sometimes you just want to make the phone call. But you could be on the phone for 30, 40 minutes.
Yeah.
Sometimes longer. So you need to minimize, you need to get things done right and minimize the opportunity for things to go wrong. As a concept, I think making tax digital, MTD, I think it's fantastic. I don't understand what a lot of the issues have been with it because, and this could be just timing, that I came into the accountancy world when things were already so digitalized that Xero, QuickBooks, Sasu, Free Agent, these have all existed as cloud apps. There's things like TaxFiler that interacts with HMRC in Companies House. So for me, the concept of digital, it's what I was doing anyway. And a lot of business owners are already MTD compliant just without realizing it.
Yeah. And I think that's a big thing, is that a lot of small businesses especially, there's so much information that they almost go, oh, and it is that thing of half of them are compliant, they just don't know. But it's almost that can of worms, isn't it? They just don't, or going down that rabbit hole. We've all done it. You start looking at one thing, you don't know if you're compliant, you start looking at that, and then you've lost the day, the week, whatever.
Yeah, and I guess to sum it all up, speak to either your accountant or just find one to pose that question to, because if you go and Google it, other search engines are available. You're going to find so much information because this has been rumbling on for like 10 plus years.
Is it really?
Yeah, more than that.
Wow.
Yeah, you're going to find so much information, and then you've got to filter what's relevant, what's out of date. You then got the thing where with Microsoft, because I use that quite a lot now, you've got Copilot. You've then got what's ChatGPT. If you've got the ones that are plugged into the internet, they use the content that's out there. They won't know if it's correct or not. Yeah. So this is why speak to a human that will be able to sense check it. If you speak to ChatGPT and ask it the question, it will look at what's information's out there. And we know things like Wikipedia, it's user-generated content. That doesn't mean it's factual. So yeah, don't be scared of MTD. Overall, it's great. Just have a chat with an accountant and they'll put you on the right path. They might even reassure you and say, you don't need to do anything. You're already compliant.
Fabulous. I love that. Definitely. So the main thing to come out of today is speak to an accountant, whatever stage of the business I think you're at there. Carl, I said we'd talk for about 30 minutes. It's been 40. I knew I'd waffle on. I knew I'd throw loads of stuff at you. Where is the best place for people to find you?
It's going to be the website, really. The website is carlfordaccountancy.biz. You can, however, find us on the socials. That's Facebook. I so want to say Twitter because X still doesn't feel right. But Twitter or X, Instagram and LinkedIn. Search Calder and Associates on there and you will find us. Don't search on TikTok because we're not on there. I keep being tempted by people.
You mean you're not doing crazy accountant dances or anything like that? No.
No, I just think, you know what? It's dehumanizing things that we need more human interaction. So I'm, on a personal level, I'm backing away from social media more and having face-to-face interactions, phone calls with people, basically going sort of old school before this wave of social media took over. And it's a happier place for people's mental health, but also I think it's much more reliable for getting information.
It's much more human. It's much more personal. You know, having a cup of coffee with someone.
And that's not to say that social media doesn't have a place. It does, absolutely. It's just, I think these sort of conversations are better.
Love that. What a fantastic way to end. For those of you that have been listening, thank you very much. We hope you enjoyed the episode. As I said, we will be bringing Carl back for a third time after the budget is done. We were laughing saying we won't get political, but actually the budget is something that we don't really discuss on the podcast or in the group, actually, but it is something that we've definitely said businesses, you know, it affects businesses, and we want to kind of cover that. So we're going to bring Carl back for that. For those of you that are watching on YouTube, thank you very much. Please do drop your comments or like and subscribe. Carl, thank you for joining me today. It's always a pleasure.
I've enjoyed it. Thank you.
Have a cup of coffee with you, let you take over my group. Actually, I'm just going to say, Carl hosted local Business Success Network meeting last week and was hilarious when he did it. He asked for a script. We don't do scripts. So I gave him some bullet points, to which he pretty much read out in a very humorous way. And I have to say, Carl, the feedback from those that were attending, absolutely loved it. So thank you very much.
Brilliant.
It's always a pleasure to work with you. And you're going to be on the front cover of our Warwick and Leamington magazine as well. So
yeah, I'm really looking forward to the launch of that. Yeah,
I'm excited to. We just can't get rid of you, and we don't want to either. So thank you for being our accountancy expert. Thank you for joining me today. And I will see you very soon.
Perfect. Thank you.